Hello guys, good morning. It's Nate here from NateFX TV. And in this channel, if you're new here, this channel is all about Forex trading, crypto investments, crypto airdrops, and more. Okay, so if that's what you're interested in, then by all means, I'd like to invite you to subscribe, hit that bell notification icon, like and share this video if you find it informative, or if you know anyone who is looking to learn about Forex, you can share this video with them. I hope that you'll find this video helpful. So today in this video, I'm going to teach you guys how to trade order blocks. Not only that, but also how to correlate it with the block flow. Okay, so what a block flow is, it's just a move whereby it's created of order blocks in one direction, which also creates what we call an impulse leg, okay, on a higher structure. Like when a move, let's say on the 4H, is creating a lower low, okay, we expect that in this leg from a lower high to this lower low, we'll be having what we call bearish order blocks, okay, bearish order blocks that will be created, and then they will be retested. You'll even be able to see them on the lower time frames. They will be able to be retested, and then price will just continue that way. They'll be created, and then they'll be retested, and then that is and then in that manner, price will keep on pushing to the downside. Okay, so every impulsive leg is created of different kinds of order blocks. Even areas where price reverses from is due to order blocks, and even sometimes it may be due to inefficiencies. Inefficiencies, in a way, I mean imbalances. Okay, so another way of calling imbalances, these are inefficiencies. Okay, so price will usually come back to an inefficient price level, or where price was inefficient, to fill in that gap so that it can continue moving efficiently. Okay, so yeah, that is why I call them inefficiencies. So if you hear me saying these words like inefficiencies, then this is what I mean. And also guys, before I continue, if you want to learn from me more, I have a free Telegram group. Okay, you can join. The link will be down below in the description. In there, we are few individuals. I also teach how to trade. I kind of explain more in depth, so it's like I'm just holding you by the hand, teaching you everything I know, how I trade, the trades that I take. We will all be taking them together, and it's just for free. So all you have to do is just check the link down below in the description. All right. And also, if you're wondering what kind of brokers I'm using, the links will be down below in the description. And you can follow me on my social media platforms like Instagram, Twitter, and the links will also be down below in the description. So let's get started. So usually, these lines that you can see here, they represent the London session and the New York session, since these are the only two sessions that I always like to trade in. So I'll be showing you examples on these four pairs, which I love trading. Okay, but as for now, I only trade these two due to the account size. Okay, but if the account size increases, then I will add these two. So how I planned my trading was that during the London session, I trade GBP USD and Euro USD, and then during the New York session, I trade AUD USD and gold. Okay, yeah. But as for now, I'm only trading these two because, very first of all, this one has good volume in the market. It moves fairly well, okay, but this one is slow, which means I can take advantage of that and find those sniper entries. And even when I'm risking, I'll only be risking really small. Okay, yeah. Okay, so let's get started. I'll start from GBP USD. We always first have to understand where the block flow is, okay, where the order blocks are heading. We know that if we start from here, yesterday, price was creating bearish order blocks. And by the way, if you guys do not know about order blocks, let me just get you through this quickly. We have 6 types of order blocks. Let's assume this is a a bullish candle. I'll make it blue, and then this one, sorry, put another one here. Okay, so we have a, let's make this one bearish. This one will be red, this one will be blue. Okay, and then the vice versa also, we have another type of order block here. This is a, okay, this one will make it blue. So essentially, these are the types of order blocks that we are all used to. Okay, so this here is a bullish order block, whereby you have a small bearish candle and then followed by a bullish engulfing, which also starts an impulsive leg. Sorry, guys. Yeah, so you just mark the base of the candle, this candle, the base where the body is. And then if this candle maybe has a wick of, or if this one, you put it at the, you adjust your zone at the lowest wick of the two. Okay, and then you wait for price to leave, come back later on to mitigate, and then you buy. Okay, so what we are always told is that you always have to buy on the bullish engulfing, but the problem is when you buy here, essentially you are buying when price is high, and that is why you will see that always, or most times when you buy when price is up here, based off of bullish engulfings, you'll always see that when price comes, you will always see that price will always reverse. Okay, and to see that sometimes you may be in a very big drawdown if you use a bigger lot size. Okay, and that can mess up with your emotions. Right? Yeah, and the same thing also here. The same thing for this bearish order block. Bearish order block over here. Okay, so here you always start from the body. If these two candles have wicks, make sure that your zone goes on the highest of the 2 wicks. Okay, then maybe I'll make this one red. Okay, so here you wait for price to break. Okay, which means that this was the last lower high. Okay, and then price broke, and then price will come again. Therefore, you are looking to enter at this area here at the lowest point. Your stop loss goes below this area. Okay, you can just put it like few pips out, and here also a few pips above. All right, so these are the first two types of order blocks. These ones are for buys, these ones are for sales. This one here, you can see it over here, also over here as well. Okay, now the second type of order block that we always have is the continuation order block. You'll have a candle like maybe a bearish candle followed by a bullish candle. We make this one blue. Bear with me, guys. I know it's taking kind of long, but yeah, bear with me. I want to make this point here so that you guys can understand. And then we have a bearish. So this kind of order block is called a bearish, bullish, bearish order block. It always marks a continuation down. Okay, so this is your order block. Okay, so if you want to mark it, just put your zone, which means you start from down here, then you extend it. Okay, you wait for price to break. Sometimes they may all be equal candles, or sometimes this one may be longer. slightly longer, breaking below these lows. Okay, so you wait for price to break, to come back later on to mitigate, and then you take your continuation. Usually these types of order blocks are being mitigated really quickly, especially if you find it on the lower time frames. The mitigation happens instantly. Okay, like after it's broken, and the second or third candle usually comes back to mitigate, and then price continues. And usually you usually find these moves when there is enough momentum in price, when price is pushing, maybe in a lower low. Okay, or maybe when price has created a lower high and then it's pushing to create a new lower low on higher time frames. You'll be finding these types of order blocks in the smaller time frames. Okay, the same thing also, if you were to invert this, we have a bearish bullish order block. This candle will be blue. Okay, and then the next candle, this one will be bearish. Okay, and then this one will be bullish. Maybe it will go slightly above, or maybe they might all be equal. Okay, but they all just represent a continuation to the upside. So this kind of order block we call bullish, bearish, bullish order blocks. Okay, if there are any kind of wicks below, you just make sure that you encounter for them. The stop loss goes slightly below. Do not just put it right there. To some people, they may put their stop losses right there, but to me, I love being safe. Okay, yeah, so wait. When the mitigation happens, you take your trade, and then your stop loss slightly below. So right now we have 1, 2, 3, 4 types of order blocks. And then lastly, we have this kind of order block which starts an impulsive leg, okay, or which starts a move to the either upside or to the downside. And usually it's like when the market is about to reverse, okay, you will have a move like, let's say this is a bearish engulfing, or maybe a bearish candle. Okay, and then you will have another candle followed, which will be just small, but this one will be bullish. Okay, so this is your order block. Remember, it's not now on the opposite candle from this. We always used to that the price, the order block is always on the opposite candle before the one that breaks structure. But this one is a kind of new order block that starts a new move. Okay, so if you mark this, sometimes it may have a wick. You'll see that after this candle is being created, we have a bullish engulfing candle which breaks out of this one. And these are those kind of patterns whereby you will see a bullish momentum starting to be created from two candles. Maybe when a bearish engulfing is really long, you will have two candles. One will be a normal candle, and then the other one will be a bullish engulfing breaking this one. So usually you will find this when an impulsive leg is about to start. Okay, so this one, it also means a buy. So these kinds of order blocks, you will see that price will leave, and then it will come later on to fill the order block, and then price will take off. And then the last one, we have when price is bullish, we have a bullish engulfing there, and then followed by a bearish candle. It's not a bearish engulfing, it's just a bearish candle, and then you mark it that way. So you just wait for price to break. Okay, wait for price to break, come back later to mitigate, and then boom. So these are the 6 types of order blocks. Okay, you can maybe pause and try to take some notes so that you can go and back test on your pairs and try to see how you can find these. All right, so now that I've already shown you these kinds of order blocks. Let me clean everything up, and then let's get into the live markets. Okay, so I wanted to share with you guys how to identify these order blocks. Now that I've already shown you those types of order blocks, you can see this one was an order block which isn't mitigated yet, okay, because there was enough momentum in price. But as you can see, price on the 1 hour was still maintaining these bearish order blocks, and it was breaking through the bullish order blocks here, okay. As you can see, we had the bullish, bearish, bullish order block, which came later on to kind of feel the inefficiency on this candle. And what I mean by inefficiency is unbalanced price, okay? Like this point. You see that this bullish candle here broke all these highs. So the last week that this high created was here. But again, price really attempted to come and fill that space that was left. Though it did not fill the whole thing, but it tried to come fill the inefficiency. So this is what I call an inefficiency. Usually, sometimes price will come and tap to the wick to fill the imbalance, or sometimes price will just come and fill at the point that it will fill, because you must understand that price will not only fill an imbalance on the 1 hour, it will try to fill as many imbalances on different time frames as possible, because this is just like an algorithm, okay? So price will always have to fill the inefficiencies for it to continue moving efficiently, okay? So this is the point that it reached, and then it continued. And then you'll see that later on it came back again and filled the whole thing, and then it started transitioning. As you can see here, price was maintaining bullish order blocks. We have this one here, bullish order block. It also created a new high past this high. So this was a higher high, created a higher low, higher high, and then some sort of a range here, a new higher low, and then a break, a new high, okay? And then price came back to fill the inefficiency, and then it pushed another order block here, pushed. You might see this as a doji, but if you go to the lower time frames, you'll be able to see that it's an order block, okay? So the block flow here from the London session on the previous day, this was on the 3rd of November, okay? The block flow was to the upside, okay? The market was maintaining these bullish order blocks. It created this bullish order block here. As I said, from the open of this candle, or from the base of the candle, you mark it till the wick of the second candle, okay? And as you can see, price came in, mitigated, and then bounced off. It went up, okay? If you look to the right, you can see that there was another order block here, okay? Price was kind of respecting it a lot, okay? We have this bearish candle, which also resulted to the break of this low, okay? So here, as you can see, price was maintaining bearish order blocks, okay? Maintaining them. We have one here that wasn't mitigated until this point. But if you went to the lower time frames, you will see that there was some sort of reaction here. Not only that, we had an inefficiency here. This week was filled by this week, and then that moved down. So sometimes price will not exactly come to the order block, but if there is some sort of an inefficiency after the order block, price will try as much as it can to at least fill the inefficiency before it continues. And the only time that you can say, okay, structure has been broken, is only if the lower high that created this low, which broke the previous lower high, is broken, okay? So to me, this is the lower high, not this, okay? Because, yeah, sorry, we had a low, and then this wasn't the lower high because it did not break this. The move that was responsible for breaking this was this. So this is the lower high, which created this new low. Even just by a week going through this area in the lower time frames, you'll see that these are candles. They broke price and then it reversed. price started ranging again, and then this was the move that took out this low. So this was the lower high, created a new low, price came back again. Okay, it started again ranging. So this was the lower high, it created a new low because it took out this low here, kept on going, lower high, lower low. But as you can see, it was maintaining bearish order blocks. Okay, it wasn't breaking them, it was maintaining them. And here is where the bullish order blocks were started to be maintained. Okay, yeah, until here we have the transition bearish order blocks, and that's when we had this move to the downside yesterday. Now, how could you have caught this move to the upside? Maybe during the London session. We know that the market was maintaining bullish order blocks here, and then this blue zone here is the London session. So usually when I come maybe to start trading, I come in the markets and I look at where the block flow is. I see the block flow is going up, but you'll need to see to the left what is happening, what may reverse price. Okay, we know that we have a demand which also turned into a supply, but also we have an order block before London session. Okay, this was the order block. So if this is the order block and then demand turned to supply, therefore we know there is a very high chance price might push down. Okay, there is a very high chance price might push down. So we mark this last order block here in the 1 hour. Okay, so this was demand turned to supply, or support turned resistance. Okay, now after you've already marked your order block, you go to the lower time frames, like let's say the 15 minutes. Here on the 15 minutes, you move back, and then what you need to see is, since the market was creating lower lows and lower highs, okay, it was breaking structures, you know, okay, there is a very high chance that price might have come here to just collect more orders that were sitting at this area, because we had an order block here. We also, there was an order block here, but also this was acting as another supply zone, okay, because after a break of this demand zone, price went up, the break, it became resistance, and then price came back here again. So the thing that you need to do, you first need to see the market transitioning. When I say the market transitioning, you will need to see it breaking the previous higher lows, which were these ones. It broke this higher low, it broke this higher low with this move. Okay, so these are what I call price action structures, because we have market structure and price action structure. Okay, so price action structure are those structures that form within the bigger market structure. Okay, like when maybe the price is creating a lower low, within that lower low, within the lower time frames, you will see these smaller price action structures. Okay, now the way that you can identify these price action structures is that they do not break real major structure. Okay, because we know that the low that was responsible for this move down, the lower high was here. So the only time that we can say structure has been broken is if price takes out this high, which it did like at this point or this point here. So at this point, we could now start saying, okay, now we can start looking for buys. But we saw that the transition started from down here. The transition started from down here. The market started maintaining bullish order blocks. As you can see, we had a bullish, bearish, bullish order block. Price went up, came back to mitigate. Okay, we are looking at this bearish candle. That's our order block. Mitigate, and then price pushed higher, taking out the supply zone, and then it turned it to demand. It created another order block here, this white candle. Okay. If you mark the base and you look to the right, you'll see that price came, filled it beautifully, and then price continued. We have more order blocks to the top. Now, you guys, I think this is now starting to make sense. Understanding these order blocks, you can see that price was maintaining bullish order blocks here. We have this one here, bearish, bullish, engulfing. It's an order block. Price came, mitigated, created a new high, taking out these previous highs. Okay, started creating new highs, maintaining order blocks. It formed an area where it was also reacting from this order block here, retesting the first time, second, third, and then price pushed, creating a new high. Now, these are just structural highs. They are not market structure highs, okay? These are just structure highs based off of price action, okay? They are not major higher lows or higher highs. So you can just call them structure highs or structure lows. It created a structure high, a structure low here as a pullback, and then a new structure high, okay? So we had an order block here on this white candle, and then price created some sort of liquidity, and then finally we had that transition. Boom, price just melted, taking out all these lows here, okay, these lows, but also it created one last high which went above this. So this was a structure high, and this was it. So for us to be interested to now start looking for sales at around this area, we need to see this structural lows be taken out, okay? So they did here with this bearish engulfing. We have 1, 2, 3, okay? They are taken out, at least 2 to 3 areas they need to be taken out. And then if we try to refine our entry, you'll see that we had an order block here. Okay, let me now mark it, adjust it a little bit. Okay, so this was the order block, and as you can see, after breaking structure, price came back, boom. So if you wanted to enter on the 15 minutes, you could have entered here. And as you can see, this was when the London session began, broke all the structures here, and then the transition began to the downside. So this is how you could have caught your move to the downside. But again, you can ask me, why are we looking for sales? Because in theory, price is still allowed to go down. It hasn't broken structure. This was the lower high that created this low. So in theory, we are still good to go down. But also you need to ask yourself, where would price reverse from? We know that we have an area here, an order block, which is also acting as an area of demand. And as you can see, when price reached it, let me put a ray line so that you guys can see. At the base of this candle, as you can see, price just tapped it and then reversed, okay? It tapped it 1, 2, 3 times, reversed. But let's say you wanted to enter this on the lower time frame, like maybe the 1 minute. How could you have done it? We now go to the 1 minute and show you this area. Now that we already know where our order block is, like on the 15 minutes and on the 1 hour, since we already refined it to the 15 minutes, let's go see how we could have caught this GU trade. And when was this? Yeah, the 3rd of November. And this is how you can always catch trades within sessions. Like during London, you just look for order block. You look for what happened previously, like in the Asian session, what really happened, so that you can know exactly what to look out for. Okay. Now, as you can see, the market took out these structures because this was the move up, and then we had that transition, taking out this low, okay? Didn't take out this one. So this was the move that took out this one. So you can mark maybe this tiny candle here, which means price came back and then created a new transition here. So these were the points that you could have taken your trades. So you always have to wait for a move that breaks structure to the left. Like if the market was maintaining higher lows, okay, you wait for a move that will break at least two of the major higher lows in the lower time frame, which are this here and this, okay. Yeah, so this one, it's not that strong because it only broke this one and then price reversed, but this one is, because as you can see the move down, just this move alone itself took out this low, okay. So after that, you mark the order block, this tiny bearish candle that you guys can see, this tiny candle here. Our intention is to ride the move to the next order block, which was down there as we saw in the 15 minutes, I believe. So this last, okay, now when you find an order block within a bigger order block, like on the 15 minutes, make sure even if you're taking a sell here, make sure that your stop loss is at least above, maybe even the wicks to the left, okay, or is above the 15 minutes order block. So this is how you could have done it. You enter here. If you wanted, you could have placed a pending order, okay. Just place a pending order. Normally I love going for 3 pips, okay, 3.2 maybe, and then you target this area here. And as you can see, Bob's your uncle. You are in the money here. And how long did this trade take you? So you entered sometime later on during the London session. So you entered on this trade at 1 a.m. Sorry, 7 a.m. Okay, since my time is in London. So yeah, in my time zone, it's like 10 a.m. Okay, so price kept on maintaining bearish order blocks, which kept on telling you that, okay, we are still moving down. But at this point, when price reached here, it took out this lower low, okay, you were already safe to break even, okay, because price took it out. And by the time it came back, usually I love to put my stop losses slightly below where price is, just like maybe half a pip out, okay. Yeah, and as you can see, price just went on, and this was 22 pips, risking 3.2 pips, and that's a 6-to-1 trade. As you can see, this is really, really consistent. Now, due to the time, I won't be able to do more examples, and I can also see that my screen is really, really lagging, like my charts are really lagging. But yeah, I want also to do a short video because I want to catch a trade on London session, which has already begun. So let me just ask you guys of a favor. Go in your charts and try to kind of do the same thing. You can use the session breaks. You can use the session breaks indicator here. Just type sessions. Okay. Sessions, and mine is called session breaks. This one here by ICOSTAN. Okay, this one, session breaks. And then when you select it, you'll be able to adjust your sessions that you want. So for me, I only trade London and New York, so I have adjusted them that way. And then you'll be able to select here columns. They will show up as columns, not as lines or as anything here. And then you can maybe choose different colors. For me, the London is blue, and then the New York is gray. Yeah, that's how I did it. Thank you guys for watching. I hope you have found some insight on this. You can go back test on any pair. Yes, you can trade this method with any kind of asset, either be it indices, crypto, forex, everything that has a chart. You can trade this because this is just a smart money concept. And it has been really, really helpful, especially to me. And I have been teaching a lot of my students also how to do this. And by the way, to remind you guys again, my group is free. I do not charge you for anything, so you can join free of charge. And every trade that I take, I always share it there. So yeah, that's a bonus. We can trade together if you want to. Thank you guys for watching, and that was it. I'll upload this video depending on when you will see it. Maybe we will be far away already from the London session, but again, you'll be able to trade with me during the New York session if you join my group. Thank you guys for watching, and that was it. If you haven't subscribed, please subscribe, like, and share so that you do not miss future content. Thank you and goodbye till next time.